Welcome back for another top-notch video. This week, guys, we're going to be talking about the week of July 9th through July 13th. As always, if you have a TSP or Thrift Savings Plan, brokerage account, IRA, or any investments in accounts, this is the channel for you. We follow the general indices, and I'll show you those indices right here. We go over the C Fund or ETF IVV, which is the S&P 500, the S Fund or VXF, they are the same for the Dow Jones, I Fund or EFA for international markets, and the F Fund or AGG for bonds. So for this week, we always go over very general and then kind of go in a little more specific of what we are going to go over. So now that we have our indices down, let's talk about what happened for the week. As always, we're going to go right into the S&P 500. Just some very general knowledge for the most part. We just kind of saw some ups and downs across the board for the day and whatnot. Moving into the S&P 500, we're getting really close to this red line here. Of course, these stocks are from TSP Talk, and Tom does these charts. He does a very good analysis of the charts. We like looking at these charts just because they do a very good job there. And if you have any questions or concerns, you can always check out their website. Same charts are up on their website. But looking at this, as you can see, we're at our top here. We're really looking to see if that can break the 2800 line. Not sure if it will or not. We do seem to be kind of in a holding pattern with our blue lines here, but really looking to see if it can snap that red line. We'll go into more focused charts later on to see if we're going to probably break that line or not. Moving on, as you can see with our PPO line, we are moving above the red there, so it's very good. With the S Fund or VXF ETF, we are above our moving averages, which are great. We had a nice little bounce there back in July. Continued to rise, and now we're seeing a little bit of resistance here as we come to the very top of the chart with the end of June and now in July. Not really sure what that will do. Keep in mind that we do have an earnings week that could boost our charts up, or it could not. We'll have to wait and see. Earnings do look like they'll be good, though, forecast-wise, and that could put our charts up. So we'll have to look at our charts to see what this overall broad indices are, what's going to happen from here on out. As far as the I Fund goes, or EFA international markets, still below our 200-day moving average. Not really seeing very good things at the time for the time being. On our 2-day charts, which I'll show you later on, it is looking favorable, but we're still just lagging by a tad on our weekly charts. Not a time just yet to probably get in, but we are getting very close to that point. I think we could see significant gain in the second half of 2018 for EFA. Once again, that's not a forecast. That's just based off of what I'm seeing off the charts. That could always change. And then we have AGG or bonds. And what Tom has here is it shows a major gap. So just keep that in mind. We are above our moving averages. We might see some resistance up here. But gaps tend to be filled typically when it comes to charts. So just keep that in mind for AGG. We have not been in AGG for most of the year just because we see stocks outperforming bonds. So that being said, let's look at our weekly funds. So for the funds for the week, we had a very good week actually, the 9th through the 13th. Every fund was up, so wasn't a bad place to be, and we were in the S Fund for the majority, or for the entire week. So we did a little bit better than the F Fund and the I Fund, not as good as the C Fund. We missed out on a little bit of gain there, but we didn't diversify just because for the most part, when we diversified earlier on this year, we ended up getting a little bit behind that S Fund. So we kept it mostly in the S Fund for this round. Seeing where funds are at now, we might want to do another diversification just because when all charts look favorable, we want to capture the one that's going to gain the most. And since we don't know which one's going to gain the most when they're all favorable, we put a percentage of our portfolio in each one of the funds. And that's diversification is also just a very good thing to do. But overall, we're not sitting bad for the year. I can kind of show you where we're sitting. So for the year, we got, for our major stocks, we got the C Fund sitting at 5.8%, or that's IVV ETF. VXF ETF, we're sitting at 9.14, or the S Fund. And the I Fund, we're still down. F Fund is still down for the year as well. So our leader is the S fund, about 9%. And if we look at our charts for the year, this is through July 14th for Top Notch. We're sitting right around 6.79%. That's with the TSP fees built in. Without fees built in, we're about 7.5. So 8.5. 8.5. We're about a percent and a half behind the leader with the gross projection for our fund. Not terrible for the year, but that just kind of gives you a good idea of where Top Notch is sitting. If you are interested in tracking your TSP funds and seeing what your gains and losses are for the year, you can always check out my other video, which you can get this spreadsheet off of Google Docs, or you can write questions in the comments below. So moving right along, let's move into more. So as you can see, this is IVV, or the C fund, and with the C fund, for the last week here, we are just, like I said, we're coming out against this line here. It looks like it popped its head above. On that other chart, it looked like it was just about at the top. Here we're kind of seeing sort of like a cup and handle type deal. It's kind of obvious that usually is a bullish trend, or we could probably see a bullish flag out of this. It's good that we are above our trend lines here, so that is very, very positive. We'll have to see where that goes from here. On our charts for the S&P 500 or IVV C fund, we are sitting for a weekly chart. We are sitting at, last week we were at 1.36, and this week we were 1.26, so still seeing a little decrease on our charts. I'm not as concerned with this decrease though, because it's not as decreasing as much as it was at the week prior, so that's a very good thing. Probably just a small to be expected little correction here, not as significant as the February or March corrections, but and we are still in the same correction, but just consolidating these gains here. And if you look at the 2-day chart, we're seeing that our blue line did go ahead and cross that for the first time in about a month and a half, so that's very good. We're sitting at the very top here of our line if you look and scroll all the way over, so that's good. I think this is a good place to have your funds if they're in the C fund at this time. Not a bad place to be at all until we start to lose this 2-day chart, but I don't see that right now. On our 4-hour even, we are way off base. So usually when the blue line is above the red line, we hit this negative energy, we can start to see this overturn pretty quickly. And I would even say that we might even see a weekly fake out. That's where the chart is going down and it doesn't continue into the red bars, it heads back up into the green bars. A good example of this would be right back here in December. We were going down, bars usually go all the way down into the red, and it did not. It increased, and the way we catch that is by looking at our smaller charts. It's our 2-day and 4-hour chart. So a big chart we're keeping track of for the C fund is the 2-day chart, and right now we're positive. So we might try to diversify this next week if we see it pop above that level. For now, we are going to stay with the S fund, but we could make a move this week, and if we do, we will always put that move on our Twitter and Facebook accounts, as well as in the comments below of this video. Moving right along to our next fund, we have VXF. This is the S fund. This is typically where we have our funds. Since it's been one of the best performing funds for the year, it was up for the week, so that was good. Seeing some volatility overall. Going to be coming up against a line here right around about 123 here, so just keep that in mind. Some resistance possibly. Hopefully we can beat that out. We are in a trading range here between this blue line and purple line, and we are above our moving averages. Moving into our more specific chart here on stock charts, our weekly chart also shows a decrease in energy. A little more significant, so a little more worried about VXF. We do have our funds here. It might be good to diversify. I said that earlier, but looking at a 2-day chart, we are on our way out. Now we don't have that blue line above the red line just yet, and we are not out with the red bar, so we'll be tracking this very closely to ensure that we end up positive and end up making making a percentage or money for this next week. But just keep that in mind going forward. This is a little more concerning, but not enough to get out of the charts for this week. And I don't even think I'd get out of this. I would more so just try to diversify in case we did see another Correct. Little correction here. So that's VXF, or the S fund, Dow Jones, and moving right along, we'll move to EFA. This is our international markets. With international markets, saw not a whole lot of positive. We were able to get above our 20-day moving average, but we are still sitting below all our other moving averages. This is a giant trading range here between the blue and purple lines. Do I think it could head back up? Yes, possibly, but I'm just not ready yet to invest in this fund. I need to see a little more positive traction, and I'll show you that on the charts for the most part. So with EFA or the I fund, for a weekly chart, we are sitting really close on our DO. So we were at negative 5.80, and then we moved to negative 5.81. So just by the smallest of margins for that week, we could see a topping out here. With a topping out with these charts, we usually see it tend to go back up. We didn't see that in the March/April time frame, and we barely made positive charts here before it headed back down. On a 2-day perspective, it does look good. We have not been up since end of May with that blue line crossing the red line. We could definitely see that in this next week, and possibly allocate a little bit of our funds here. Not as much as the C and S fund, it's not as favorable, but a little bit here to try and catch some upward movement with EFA. We do have one move yet this month, so that's good to note, and then we always can move funds into the G fund. Overall, with this chart here, this is our 4-hour, we were seeing it go into the negative, and then it had a reversal from that, so just keep that in mind moving forward. And the last thing we want to look at is bonds. So looking at AGG, or the F fund for our bonds, slowly continuing to see this to creep up. We still have not hit the highs back we saw end of May. We are possibly seeing some resistance with this purple line here. Kind of curious to see what this does. Like we said on our other charts, we did see a gap, so just keep that in mind. Overall, we have not been invested in AGG just for the fact that it does not outperform stocks, and that's clearly evident from the charts we showed you earlier on the weekly perspective. Moving to AGG on the more specific charts, we are seeing on our weekly good positive weekly increase here. Charts are reacting ever so slightly, which is good. On our 2-day charts, we are seeing some just slow upward movement, so that's still good, but we did see some down last week, which was something we cautioned against, and then now up again this week, so that just shows some indecision for the most part. We can see that from this spinning top here this last week, and I'm not really sure where AG will go, but we're not involved with it at this time. So that is the major indices for the week. We covered pretty much everything. If you guys have any questions, go ahead and write them in the comments below. My question is for you guys: what fund do you think will be doing better in the next month? The C or S fund, since they are doing right about the same. What fund will overperform the other? This last week, the C fund overperformed the S fund, and this year, the S fund has outperformed the C fund. So I'm really curious to hear what your guys' thoughts are. Go ahead and write those in the comments below. And as always, like, subscribe, or share this video. This is our percentage and where we have our funds for this week. We are currently sitting in the S fund, or ETF VXF, 100% with new allocations going to this fund. As always, this was another top-notch video. Hope you guys liked it, and we'll see you guys next time.